Good evening, everyone. Today is the 6th of May, and here are some of the major headlines of the US markets. Stock of COVID 19 vaccine developers are trending lower after the US Representative Catherine Tai announced support for a waiver of intellectual property protections. We are for the waiver at the World Trade Organization. We are for what the proponents of the waiver are trying to accomplish, which is better access, more manufacturing capability, more shots in arms, she said during an interview. Pfizer is off 3.1% pre-market on the news. Biotech declined 4.3%, following a 3.4% drop in the previous session, while Moderna fell around 2.4% after tumbling 6.2% on Wednesday. At the World Trade Organization, the Biden administration will engage in negotiations for the text of the waiver and push for the support from other countries. The US Chamber of Commerce is opposing the decision along with others in the business community, stating that it will take us off the track in the ongoing and successful efforts to license and scale global production of vaccines that individuals can be confident are safe and effective. A large number of pharma companies, including vaccine developers Pfizer, Johnson & Johnson, and AstraZeneca, says waiving IP rights wouldn't solve the supply problems in the short term because contract producers lack familiarity with the new technology behind these shots. Proponents of the waiver's proposal says that there are more than a dozen drug makers in developing countries that could be equipped to produce the shots and have passed quality checks by the WHO and the FDA. It would allow the nations to make their own copies of the vaccine without fear of being sued for IP infringements. The US government owns patents related to the vaccine because some of the technology behind the shots were developed at American government labs. States and cities are now targeting Americans who might be reluctant to get a corona vaccine as demand for the jabs slows across the nation. The US is now averaging about 2.3 million shots per day, which is down 32% from peak last week, according to the CDC. Some public health experts are now even concerned that the decline may jeopardize the ability for the US to reach herd immunity, leading many localities to increase incentives for the residents to take the jab. Maryland is offering $100 to state employees that get fully vaccinated. Detroit is giving out $50 prepaid debit cards to anyone who drives a resident to vaccine site. And in New Jersey, anyone who over the age of 21 can take their vaccination card to a participating brewery for a free beer. Connecticut has a similar program in which residents who have received at least one vaccine dose can get a free beverage at participating restaurants in the state. That's not all. Looking at the boost, West Virginia's vaccination drive, Governor Jim Justice announced last week that the state would give $100 saving bonds to 16 to 35-year-olds who get a vaccine. Harris County, the Texas county that houses Houston, also just approved $250,000 to be used for gift cards and events, though some are saying that the incentives do not put the US in a positive light compared to the rest of the world. When people are clamoring for vaccines in India and in Brazil, it just makes us look like a nation of sulky adolescents, said Dr. Peter Hotz, Dean of National School of Tropical Medicine at Baylor College of Medicine. So if it's absolutely necessary, sure, although it's tough to swallow. Where do we go from here is the question. The US stock index futures inched up overnight but not by much as traders await the latest weekly update on the number of Americans applying for jobless benefits. A report from Labor Department which likely shows initial claims fell to 540,000 from 553,000 in the previous week, suggesting that the numbers are still trending downwards. It would also mark a fresh pandemic low given the pickup in the economic activities. Unemployment is still a problem. More than 16.5 million Americans were receiving jobless benefits as of mid-April, including more than 12 million Americans on the federal pandemic unemployment assistance and pandemic emergency unemployment compensation programs. Last month's non-farm payrolls report also showed that the US economy is more than 8 million jobs short of its pre-pandemic levels, but a fresh NFP figure will be published tomorrow. On the earnings calendar, investors will get quarter one results this morning from Moderna, Regeneron, Kellogg, and Viacom CBS. After the bell, reports will be released by AMC, Dropbox, Expedia, Square, Roku, Beyond Meat, and Shake Shack. Traders are also looking for signs that crypto craze may be cooling. Dogecoin fell 12% overnight to $0.60. With the disruption in supply chain, risks of rising prices are intensifying across the economy as a growing number of companies warn that the supply shortage and logjams will compel them to raise prices. In fact, tight inventories have seen prices surge of raw materials ranging from semiconductors and steel to lumbers and cotton. Manufacturers are scrambling to replenish stockpiles to keep up with the accelerating demand as eager shopkeepers take out their stimulus-filled wallets following a broad vaccination rollout. As commodities and materials become more expensive, the bigger question at the table is whether faster inflation sticks around. Investors and policymakers alike are hoping that the price hikes prove transitory, though it's still too early to predict the future, and the Treasury Secretary Janet Yellen even made waves this week by suggesting tools that could combat an overheating economy. Price increase will continue to be an important element as we look at the back of the half of the year. Colgate-Palmolive CEO Noel Wallace told investors after the company's quarter one results, "I anticipate that you will see more price increases across the sector given the headwinds that everyone's has faced in this space." Many other companies have also warned for a price increase and supply chain disruptions on their earning calls, including Apple, Coca-Cola, Procter & Gamble, and Kimberly-Clark. Marking the most momentous decision of the body's short existence, Facebook's oversight board has decided not to permit the former President Donald Trump back on social media network. However, the group did ding the company for inconsistent application of its rules and directed that it revisits and clarifies the nature of the ban. Facebook created the oversight board to insulate itself somewhat from what we are becoming thorny decisions about the content regulation on a network of billions of individuals and groups, and during a time when the president's controversial posts became one of the most significant social issues of the internet era. In what became an indefinite suspension, Facebook stopped Trump from posting to 35 million followers after the shortcoming of the US Capitol on January 6, the day Congress counted electoral votes for the presidency. That came alongside bans of Trump on Twitter, YouTube, Snapchat, Twitch, and other platforms. Trump's post during the Capitol riot severely violated Facebook's rules and encouraged the legitimized violence, according to the Oversight Board. The board also found Facebook violated its own rules by imposing a suspension that was indefinite. Within 6 months, the company must review the matter and decide a new penalty that reflects its rule, the severity of violation, and prospect of future harm. Now some more updates from the companies. SpaceX successfully lands Starship for the first time. Blue Origin to auction off-seat for first space tourism flight. Under scrutiny in China, Tesla increases data transparency. WhatsApp launches peer-to-peer payments in Brazil. Fox to acquire Outkick Media led by Clay Travis. Unilever shareholders back aggressive emissions reduction plan. Positive initial data for Moderna's COVID-19 booster shots. Square Online expands to offer on-demand alcohol delivery. Google to allow more reallocations and remote work. Fed remains the biggest risk to US economic growth. T.S. Lombard. Few of the Wednesday's key earnings reports are Barrick Gold up by 1.1% defending focus on reinvestment. Booking unchanged after hours following mixed results. Immersion Electric down by 0.2% despite lifting guidance above consensus. Etsy down by 9.9% after hours forecasting slower growth ahead. Fastly down by 17.5% after hours on downside guidance CFO transition. General Motors up by 4.1% given confident outlook despite chip shortage. New residential down by 0.9% missing earnings estimates. PayPal up by 4.7% after hours boosting 2021 EPS growth rate. Rocket companies down by 13.2% after hours slipping from strong quarter 4 levels. Sunrun up by 4.1% after hours trimming quarterly losses, raising guidance. Uber down by 4.8% after hours, turning around after record gross bookings. Now, some of the updates of the world's market. In Asia, Japan up by 1.8%, Hong Kong up by 0.5%, China down by 0.2%, and India up by 0.5%. In Europe at midday, London flat, Paris down by 0.1%, Frankfurt down by 0.1%. In the futures market, Dow up by 0.1%, S&P by 0.1%, and Nasdaq by 0.2%. Crude down by 0.5% to $65.31. Gold up by 0.5% to $1,792.90. Bitcoin up by 4.2% to $57,267. 10-year Treasury yield down by 1 basis points to 1.57%. Today's economic calendar includes at 7:30 reports from the Challenger job cut, 8:30 initial jobless claims and the productivity and costs report. At 9 a.m. Fed's Williams speech, 10 a.m. Fed's Kaplan speech, 10:30 EIA natural gas inventory, 1 p.m. Fed's Bostic speech, and again at 1 p.m. Fed's master speech, 4:30 p.m. Fed's balance sheet, and at 6:05 p.m. Fed's Kaplan speech. That's all for today's market updates. Thank you.